Hello. Can you two hear me? Okay. Sorry.
Yes.
Okay. Here we go. Is my screen now on market monitor?
Yes.
Okay. Thank you. Hi.
Hi.
Sorry, just dealing with my parents in Houston. They just got power back, so that's good.
Oh,
What's going on in
for
Houston?
After 5
3 or
days,
4, 5 days?
5 days without power.
Oh
Yeah.
my goodness.
So
No generator.
no generator, not my parents.
Oh man.
Anyway,
Okay, well they've got okay. Yeah.
we got power. So, all right, here we go. And I have about 30 minutes today. So, I'll go through and you two can stop me anytime you want. I know Joseph's class was just finishing, so there might be people that join because it's over in West Ashley. So there's nobody in
Yeah.
today. I think they're all over there. Um,
Okay.
so prices. So just interesting market right now, just trying to figure out all the different dynamics of happening. Let me go back to all construction types. So look at the last 3 years, right? Really, if you kind of look at it, we hit 425 in May of 2022. We were 420, let's call it May of 2023, and we've been at 425 1, 2, 3 months in a row, right? So if you look at our peak, seems to be right around 425. So yeah, it shows 3.7% higher than a year ago, but really the last 24 months have kind of been more or less sideways, right? Which again, to do that from 3% to 8% interest rates is pretty remarkable. But it seemed to be like, okay, well, we are at that number that we're going to go back down seasonally from here, which we do every year. Now, when you break apart the two, I thought this is interesting. If you go look at new construction's off 0.3%. And when you kind of zoom in on new, again, it's more jumpy because they like their quarterly closings and everything, but it's off from where it was in 2022, 2023, right? You can see how much lower it is, but that's just because they're building more affordable housing, right? They've kind of probably shrunk the houses, maybe cut some things out. Like they're trying to get the price down because the interest rates are being higher. Even with their buy down of rates, they're trying to make it more affordable. So that's I think what you see happen from here to here is the builders trying to bring rates down. So when you look at resale and to get rid of some of the jumpiness, so look at this, right? So it peaked in April of 2023, but interest rates started really going up, before then, but all those houses are already in motion, right? All those houses were already in motion and they closed around here, but they've gone from 443 to 407. So that's a pretty significant change, right? And I can't say the house prices dropped. I think this is more, they started proactively building more affordable housing, right? I think that's what this was. And you can kind of see, is it trying to find a bottom? Maybe so. But over the year, the 12-month rolling average is off 7.5. Now, if you go to resales, if we go to previously owned, it's up 8.4. So it's almost the opposite. So resales, when new construction started coming down, resales just took off again, right? So, I mean, up 8.4 on a rolling 12-month average over the past year, it went up higher, even at higher rates. So, the dynamics are really unusual that you have resales going higher, and look at 417.5, right? And then if we go to the new construction, 407.5. So essentially resales have now surpassed on price over the 12 months new construction. I think, the new construction seems to be bottoming out. It's like, I don't think they can build houses cheaper than they are from 407 standpoint. That seems like, we're probably going to eventually head higher from here. And if you look at price per square foot, if we do let's do all construction types. So up 4.2% on a rolling 12-month. Monthly, we're up 3.6, so fairly similar. You look at percent of original price, 98.7. So, we were 100 for quite a while back here. We reached it last summer, but we never made it this summer, right? Median price never hit 100% this summer, which again, this is unusual. This is not the norm, but you can also, if you zoom in a little bit, you can tell we've probably peaked out on that this year, right? We'll head back down like we do in the traditional winter months. And if you go back in time a little bit, you can kind of see this is more the traditional season. This was not traditional. This was a big drop. I don't think we're going to see that drastic of a drop, but I think we're still coming down.
So what was it, December? Like say November, December last year? What was it?
So December was 98.6.
Oh, okay.
Pretty close to where we are now. But I mean, if you think about it, we peaked out this year at 98.8 more than likely. And that was about what we were last November, December. So the spring season is at where we were last fall, winter, right? So we're going to go down from here. And again, that's fairly traditional. You pass the summer and you start heading lower on, the median price. And you look at all those price changes. I mean, we have to be going lower. There's so many price changes. I think you're going to watch this go down pretty consistently the rest of the year. So this was all construction types. And again, this is kind of funky. New construction's 100%, but like a lot of them, they're just entered in after the fact. And so I don't put much value in, okay, it's 100%. But you look at the resales, lower than last year, about 98.3. But I think we are going to turn the corner and go lower. But we're still above where we were pre-COVID. So lower is not necessarily bad. It just kind of, you're having to be a little bit more negotiable as a seller. Days on market, if we look at all construction types, still sitting pretty low. We're about 11. Now, this has the opposite curve, right? You go up in the winter, down in the summer. So I think we're about to head higher because you also look at the price changes in the days on market and it's increasing. So I think we are going to go higher, and just be prepared with your sellers that it's going to take longer to sell your house.
It's an interesting curve, isn't it? Like looking at the whole back to 19.
And again, this is fair. Like
it
if
makes
you look at
sense.
19 is fairly traditional, right? You're getting into the mid 30s and then you go down in the spring, summer, and then you go up again. So
now we're going down.
Curve is traditional. This was not. And you can kind of see the curve last year, right?
It's trending up now. Yeah.
Right. So this curve this year is gonna
be
our
higher.
low was higher than our low last year, right? We got down to 7 days on this year we're 11. So we could go up higher than we were last winter.
Yeah, we will.
Sellers just understand it's like this is more a traditional market, not this. 2 days on the market, 3 days on the market, that's not normal.
And Anton, I'm sorry, real quickly, the change in the interest rate, you generically or generally said 5 to 8, but what would you say that impact is, the whole purchasing power thing? Like if we were trying to explain that.
I think what we're feeling now is we just have a wall that everybody hit, from 3% to 8%, and now we're back down to 7, which is still much higher than the 3%. I think buyers have hit a wall that interest rates and prices matter again to the buyers that are out there.
Yeah.
In this period of time, they were going to be homeless if they didn't buy a house. I think in this period of time, they have another option. I'll just stay in the rental, or I won't sell my house. These people were going to be homeless if they didn't buy. Right. And I think now is a period of time where they have other options. So they don't have to necessarily pay your price or even have to buy a house. So I think that's what we're feeling right now, the difference. And again, you can see it reflecting in months of supply. Just want to make sure I'm on. So this is all construction types, right? So we're 2.7 months, which again, we were down to 0.7 0.8, like in 21, beginning of 22. So you can see this trend is definitely higher. Now, we were at 4 months in 2019, and I feel like again, I've said this before, I feel like 4 months, and if we go back further in time, right? So if you kind of look at this period, 16, 17, 18, 19, we were 4 months was kind of a max in that period.
Yeah.
And that felt like a neutral market to me.
Mm-hmm.
Right? It felt like a balanced market. Buyers and sellers had to play nicely together in the sandbox. And
yeah, and you always have maintained that.
yeah,
that it's
I mean, I
closer to
feel like
that
if
than
you go back in
6.
time, like if you go back to here, that was still definitely a buyer's
A
market,
buyer's
right?
market.
So
Yeah,
like even 6 months and 13, I still feel like to me that was
it
a buyer's
was.
market.
You're
Like
right.
so I feel like 6 months is
That's
too high
interesting.
of a number for the market to use as a balance. I think it's 4.
I could finally see why you see that. Yeah.
Because I mean, clearly we were a seller's market here, and then quickly, and people didn't know, but we quickly
Yes.
converted to a buyer's market
Extreme.
all the way through here. I mean, think about it. If you go above 4, first month we were above 4 was February of 06. The next time we got below 4 was January of 16. 10 years.
10 years.
10 years above 4.
Full
And
years.
now look at how long we've been. We've been 8 years below 4.
Yeah.
So think about that. 10 years above 4, 8 years below.
Interesting. Oh, I like that.
Right. So if you and that's why I think getting back to 4, and what people don't realize is like we're not that far away from 4. We could get there fairly quickly.
Yeah.
Our
We are
inventory
moving
this
quickly.
morning is over 3,900. Right. So we're quickly approaching 4. So don't, we're quickly approaching a neutral market. Now, if you look at the difference between new construction and previously owned, I thought it was interesting. It's 2.7, doesn't matter who you are right now. Now, I thought it was also interesting. Look at the difference in previously owned, up 60% in months of supply from a year ago, whereas new construction is just up 8. So they're both 2.7 now, but the resales have changed much quicker than the new construction. So this is something to watch. Like
And Mount Pleasant's month supply went up.
Yeah, I mean 4 is going to get here pretty quickly, I think. And you look at homes for sale. So I don't necessarily agree with the market monitor, because when I look at my numbers on my calendar, we're up 65% from a year ago. So, they're entering stuff as agents enter after the fact that it's closed. It's distorting these numbers. But so 43% is a pretty big increase. But when I look at a date from a year ago, we're up 65% on inventory. And remember, if we go back in time again, like we were bouncing between 5,000 and 6,000 in that time that I said felt like a neutral market. Right? And we're at 3,900. We're going to be at 4,000 this month. Right? So how far away is 5,000? I don't think it's that far away. Like I could see, next year we're going to be at 5,000, and we're going to be back in this range we were bouncing around for years. That was a neutral place. Now, when you break apart the new construction, it's up 21%. The previous home is up 55%, right? So what you're seeing is the resales are changing quicker on increase in inventory, higher months of supply, more days, like everything's changing quicker on the resale side of the market.
Because they finally feel like they can, I think. They've held on to them for a long time.
Right, and the buyers are like, well, that's not the right house for me, so I'll just wait, right?
Yeah.
It's like, I'll just wait. Closed sales off 13%. And again, it's it's July 12th. So July 12th, we're well in, everything should have already closed by now in June, right? So there's not any missing data. So we're off 13% from a year ago. And you can see the trend, 1, 2, 3 years in a row, the peak is lower each year. Right. And it is a quick ride up and a few months of flat and then a quick ride down, right? So we're in this period of time where July and August might look okay, but we're going to drop back down to this level of 1,000 sales. And when you break these two apart, here's the new construction. So new constructions, and again, it's all over the place when you try to read this. So if we get rid of that, it's like new construction's up 9.8% on a 12-month rolling average on closed sales. So up 10%. But now flip it to previously owned. Previously owned's off 8%. And like, I mean, clearly this was a huge run up and a huge drop off. But as I zoom in, I find this last month is very, when you look at a rolling 12 months, and let me zoom into 1 year, right? So like, I thought we had bottomed, right? If you look at what happened last month, right? So we look like we were coming down stable, and then all of a sudden, boom, we dropped again. So it's very interesting. We lost 15% from a year ago in June. So if we're losing 15% year over year all of a sudden, that closed sale transaction is still going down on resale. I mean, it really looked like when you level it out, it looked like we had bottomed, but this last month is like, uh-oh, that's a pretty big drop off right here. Or is that just a 1 month anomaly? Are we going down another level, you know, on resales? Because remember, the new construction's higher, and that's why you don't really notice it's only off 3.5%. But again, when you really look at what's happening, look at that drop off. So that's 16,965 sales over the past 12 months. And I think we were December of last year, we were right there, and I thought we had bottomed, but we could be going to a new bottom, right? This last month is very kind of eye-opening of we need to watch this.
So the growing inventory is as much a factor of decreased closed sales.
Yep.
Yeah.
Yep. So, you know, it's something to watch closely, and clearly we've peaked out on sales for the year, you know, on a monthly basis. And then if you look at new listings, up 6.8% from a year ago, and we're at a higher level. If you look at from a year ago, we're a higher level. You know, we're not quite to where we were in 22, 21, but we're definitely higher than 23. And then if you look at pending sales, so this is positive. Our pending sales are 9.7 higher than a year ago. So June of last year, we were 1552. This year, we're 1702. So that's positive. Now, if we break that number apart, your new construction is up 21.5%, right? So 21.5 on new. So what does that mean for previously owned? We're up 5.4. So
wow,
it's being driven, the increase net overall is driven a lot by the new construction. You know, they're up 21.5% in pending contracts. So that's a pretty big step change. And why is that? It's because they drove their prices down and they're offering incentives.
Yeah.
You know, we saw that earlier. It's like they drove their sales price down and they're offering incentives.
And I have one client right now. He got 5% military, then he got another something, then he got 15,000 towards, you know, closing costs and decorative. I mean, it was unbelievable. I mean, it was crazy how much he got.
Well, and that's, you know, the areas that have new construction competition, you're seeing it. Dollar volume. So if you look at dollar volume overall, we're down. So we're down 3% from a year ago. Now new construction is down and previously owned is down about the same. So, you know, the dollar volume has slipped. Pending sales is up, which is like, okay, well, that's interesting. Pending sales are up. So I'm trying to figure out why closed sales are down if pending's up. You know, there's some dynamics that are confusing. And it's like, is it because we have so many falling through for due diligence? Could be it, right? It looks good, right? Pending sales look good, but when you have somebody fall apart, then it's not good, right? So I'm trying to figure out why you know, closed sales can be down and pending sales up. That seems a little off, and it's just probably because so many of those are, falling apart.
Well, isn't it also because of new construction? The pending
Yeah,
being
well,
carried longer?
so the pending new construction is way up, right? So
Yeah,
up
I
to
meant just,
1.5.
yeah,
True, that's true. They're just 6 months, they're closing in 6 months. Now,
yeah.
one thing that I've noticed I've run across a lot of distressed sales here lately.
Hmm.
I two short sales that I saw, and I'm like, and they bought a year ago, they borrowed 100%, and then I have a couple in Mount Pleasant that are distressed sales because they basically borrowed
Wow.
money and went on vacations and weren't smart with their money, and now they have to sell. And I've got another
What's
one
the
that
price point?
stopped making payments. Like some of these are Mount Pleasant.
So obviously upwards of $1 million.
Yeah. I mean,
Higher.
I have 5 or 6, I would say, financially distressed sales that I've run into myself in the past 30 days.
Do you think they're
Wow.
gonna lose money?
Oh yeah, like the couple of these short sales, I look at when they bought it, and they're already their list price is below what they bought it for.
Oof, I
And it's
really didn't see
because the
that
ones that
coming.
I'm seeing
I didn't see that coming.
is they're dealing with the new construction competition, right? It's like the incentives of those new ones and driving the prices down. They're dealing with those new areas. So the ones that made financially bad decisions and aren't upside down are the Mount Pleasant ones. The ones that borrowed close to 100% and are short sales, those are the ones in neighborhoods that they're dealing with the builders. Right. So keep an I guess what I'm saying is watch, like, even if you're searching in MLS, and some of these, like, it was just looking at MLS, and I'm like, no, we're not going to look at that. That's a short sale. Like, you got to sell like, there's no way this is going to work for you. And so just like as you're playing around in MLS and you're looking at things, look at, I think there's some stress out there. I do.
So do you think those people will, well, I guess if they lose money, they can't go out and buy another house, right? They're gonna
Right.
just
I mean, if
rent.
they're short
Credit.
sale, haven't, if they're not making their payments, their credit's ruined anyway, at least for
Ugh,
a time, right?
ugh.
So, and
Anton, are
again,
you surprised by that?
I'm it's the American way, right? Some of it.
Right. Yeah.
It's like, no, don't use your house as a piggy bank and spend it on stuff you shouldn't be spending it on. And that's how you
Yeah.
get into trouble. And like, those are, the higher end ones. And then the ones on the lower price point, the problem is they didn't put enough down, right? I mean, the Mount Pleasant ones, they're fine. They'll get money out of it, but they're being forced to sell because of decisions they made. The
Wow.
ones outside the area, they just didn't put much down. So now when a life change event happens and you have to sell, then you're upside
plus
down.
inflation, their money to fund.
Correct. Well, and again,
yeah.
it's like you got expenses to sell, like, and if you didn't put much down and the numbers below what you bought it for, you're in trouble. So it's, and I don't think it's a one-off. I think these, like, watch what happens. And especially if you think about it, we're going into the harder part of the year, right?
So where do we look for those? Like, where's the best place to look for those that might be in that situation and
I
have to
hate to
sell?
say it, but the 100% VA buyers who bought in the last 24 months, and if they are in a situation where they lost their job or they have to sell, they're not going to be able to pay off their mortgage, right? By the time you take away expenses, if they borrowed 100%, they're in trouble, especially with the builders who drove prices down. I mean, we saw that the sales price on new construction, right? We were just looking at that. Look at what the builders did. And if we go up so we can really see this, 443 to 407. If you bought here and you borrowed 100%, where are you at now here? Right? And that's what
Well,
I'm
the thing
seeing.
that worries me about that is, I am sure that I was telling my buyers, buy, because when interest rates come down,
You can
you can
refinance.
refi.
But see,
Well,
these are
that didn't
only the
happen.
people, but these are the people that are in trouble are the ones that a life situation event has occurred that forces them to sell their house. If you don't sell your house, then refinance it, right? But if you're in a position where you bought in this window and now all of a sudden you have to sell and pay expenses to sell, you can't pay off your mortgage if you borrowed 100%. So the distressed ones that I'm seeing at in the higher end, they have equity. They'll be fine.
Yeah.
They made some not great decisions and they're having a tough time making the payments, right? Because of decisions that they made. So they're being forced to sell and get their equity out. So there's, and again, we're in the spring, summer, right? It's like, it's not going to get better from here.
No.
So just as you're looking at houses online, there's some of this action happening that if you really read the agent notes and you can see it's coming. And usually it's not just one or two. So yeah, it's an interesting market right now. And I'm not, again, don't get me wrong, I'm not saying we have a recession of what we did 15 years ago. I don't want to be clear, but I think specific homes are in trouble. Right. The market as a whole is fine, but there's specific homes and people that I think are in trouble. So, and I don't mean to cut this short, but like I got a lot of
Thank you,
fun
Anton.
and
yeah,
I have to run.
for an audience of two only. Thank you very much.
So,
Yeah.
but everybody have a great weekend.
You too.
You too.
And,
Thanks a lot. Bye,
I'm doing
Jackie.
another Cloud CMA next month. So I'm
Okay.
doing that class again next month, I think on the 22nd.
Okay.
Cloud team. Okay. Thank you very much. Bye,
Thank
guys.
you, honey.
Good weekend. Thanks.
Bye.
Bye,
Bye.
Sean.